Trading Live with Oscar Carboni. Good evening, traders. This 1,880th installment of these educational videos is coming at you on a Thursday night for trading, Friday, January 11th, 2019. Before we cover the topics on this board, you must know, if you don't, boy, you haven't been paying attention, have you? Futures trading, stock trading, ETF trading, baseball cards, any type of trading these days causes substantial financial loss. If you get it wrong, you need stops. You need to put them in first. You need to have risk capital that you can absolutely afford to lose. And if you've got all that going and you'd like to learn how to get this right, well, pull up a chair and pay attention, because that's what we're going to do. That's what I've got planned. We're going to get this right for trading on Friday. What are we going to get right? Trading the emini, S&P, the Nasdaq, the Russell, and see if we can catch a ride for trading on Friday. All right, so where do we stand? Traders, I've been leaving you videos every couple of days, every 1 or 2 days, showing you where we stand with these markets, right? Where we stand right now in the emini, S&P is there is a green omni once again. E-mini, S&P, Nasdaq, Russell, Dow, Tranny, you name it, green omni for the gamut. I showed you in the last 2 videos, certainly in the last one for sure, that we are at this caution area where once a market creates a formation, something like a big head and shoulders, then it cracks down. When it rallies back up, a lot of times, it will stop just about at the high of where the crack started and roll over. So that's what I showed you in some of my videos, certainly in the last one, as I mentioned. Well, we are at that caution area now, but Omni remains green, so be nimble, be quick, but for now, continue buying dips, even the S&P, Nasdaq, Russell, Dow, and transportation average. That's what this video is about. That's what the chart segment will be about, that we are in the caution area, but we maintain buying dips because Omni stays green. In fact, Omni was green for Thursday, got us in. The market ran down after we got long and almost stopped us out. It came this close, turned around, came back to break even. I was so nimble, I got us out of break even. You know what happened? It took off and hit the profit objectives. So, tomorrow we'll also be nimble, but we'll sit tight a little bit longer and we'll see if we get the same sort of action. Traders, also, I would like for you to take advantage of my monthly subscription. Better than that, take advantage of the emails I've been sending out. If you have joined my site, livewithoscar.com, in the last couple of months, or if you join tomorrow, or if you join right now after listening, I will send you a free offer where you will receive Omni recommendations from me for a trial so you can see what it is that I do at the Omni Trading Academy. If that sounds appetizing, if you need help trading, take advantage of the emails that I'm sending out. I'm not mass emailing anybody. I'm sending them out one at a time to people I'm hand-picking off my list, but a lot of them will go out eventually, so I hope I get to you. Remember, it's a free trial. The recommendations that I am using to give out to my Omniacs, you will get to see those for a couple of weeks for yourselves. Make sure you pay attention to the emails that are going out. Barring that, let's get into some video charts here, baby. With no further ado, let's go look at some charts.
My expectation coming to Omni Camp was based on a conversation with Oscar, where he said, by the time you leave, you'll actually absolutely be able to trade. And that's exactly what he's delivered.
Well, my experience is that Oscar has refined his instruction to a science. He's able to deliver the information, albeit complicated, in a very easy to follow fashion. And you come away from here with almost step-by-step instructions about how to create an Omni on our own.
He told me on the phone that he would help me, maybe get 20 years of experience. It saved me 20 years of time. And after going through the camp, and my response would be, I wouldn't have gotten it in 20 years. What he did is different than I ever would have thought doing. He looked at something that all the books I've read, all the things I've done was different than I expected. So I told him I wouldn't have gotten this in 20 years.
I've been trading for about a year previously, and I had some expectations that were just blown out of the water. The content, while simple, I appreciate the genius behind it, and I met some great like-minded people as well.
Okay, traders, we have been going off the premise since last week, maybe 2 weeks ago now almost, that the emini S&P on the weekly bar bounced off the 200 bar moving average. I showed you 20 years back how very rare of an occasion it is that you get through the 200. And I showed you all those charts. Basically, what you recognize by looking at those charts I've shown you in my last few videos is that you do absolutely hold the 200 bar moving average on a weekly in the emini S&P. So with that premise, we started talking about the market heading back up, and it has been doing that. This is the weekly, and it's held well, and it's bouncing. So you got to love that. And then you look at the transportation average, and those are the same two charts. We've been using the theory that it will hold, it did hold, and move higher from there. So these are the two charts I've been showing you, and we have been holding really well, bouncing off that 200. You take it down to the daily now. Russell for trading on Friday in an Oscarism known as an F flag looks pretty good. We had a bull flag, broke out of it, forming an F flag. Now the 50 bar moving average is about 20 bucks higher. So I mean, there's still a good long trade in here, but you may run into trouble when we get to the 50. The 50 bar moving average now is starting to come into play on many of our charts. So we're going to buy dips. We're going to look to get out on a nice rally. Very nimble. Don't forget, it's okay. We can buy the dips, but be nimble and be quick. That's what we have planned. Then you look at your emini S&P. And this is the very same chart I've been showing you. We dropped out of a big formation and dumped. Many times when you get back to what I call this caution area, you turn over and head back down for more. So in other words, you've got to best this area in order for you to consider that this is going to continue on higher. Omni is bullish, so this isn't happening, and I'm not calling for this yet. What I'm pointing out is that we are in an area that you must be nimble, you must be cautious, because if it doesn't get through here, it will turn and will go lower than that last low. Now, I just showed you a Russell chart. This is an S&P chart. We go back to the Russell. If you add more bars and zoom out a little bit so you can see more of the chart, you've got the exact same thing going on right here. The Russell has just come up. As you know, it's by the 50, but you see the caution area? You're just getting into that caution area. Now, there's a $20 trade in here if you get it, but once we get up here, if it doesn't best it, we're going to have a problem. So let's see. That's my reasoning for being nimble if you buy the emini S&P, Nasdaq, or Russell tomorrow. Crude oil, just to show you an example, is in the exact same spot. At the caution area, after a breakdown, the dump, the rally back up, at the caution area, and the 50 bar moving average comes together, just like it's happening in the Russell and the emini S&P. But this is closer to the 50 and hasn't even touched its caution area yet. So there's probably a buy, or at least a little more room. Traders, you've seen the charts. You've got my technical reasoning why. With the green Omni, we want to continue to buy, but we need to be very nimble. Why? Because we are now in the caution area I've been pointing out to you in the last couple of videos on the daily charts. Emini S&P, Russell, Nasdaq, even in crude oil, we're at that caution area. They all look the same right now, and the 50 bar moving average is there. So if we can get over those hurdles, then we can be much more aggressive in our buying. Till we get past those hurdles, I am not going to take this off the board yet. For now, it still says do not fall in love with the upside. Yes, we're buying, but we got our stops in, and we're worried until we best those caution areas. Traders, I hope this video helps you. I hope you do well on Friday. Come to livewithoscar.com. Huddle with me in my live trading room. It's free. It'll cost you nothing. And you YouTube fans, if you come to my site, you'll get to see me live on camera and microphone right there in the chat room. And if you join the site is free to join. You simply need to create a username and a password and an email, and that's it. You're in the site. I can then give you my special offer that's going out in the emails. So make sure you join the site so I can contact you. All right, traders, have a great day Friday. Have a great weekend. Keep your powder dry until the market reaches your level. Then you react. Stop in first. Get yourselves out when you reach your profit objectives, and do not hesitate. My advice to you. All right, traders, remember, keep your emotions out of trading One of the best things you can do, in my opinion, to help keep those emotions at bay, and I know that's not easy, but try this. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops or in. Emotions are our rock and roll traders. I will see you all at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.